A last-minute fight over the Fed's lending powers has become the latest hurdle for lawmakers hoping to pass a $900 billion stimulus bill. Our Fed correspondent Brian Cheung has been following this for us. And Brian, I don't know if we saw this one coming.
Not at all. Who would have thought that the Federal Reserve might be the trip up for this second round of coronavirus stimulus right up until the buzzer? So again, the report coming down from Washington, D.C., that Senator Pat Toomey, a Republican from Pennsylvania, is trying to slip in a last minute provision that would limit the ability of the Treasury Secretary to either reopen or open similar types of facilities to the liquidity programs that the Federal Reserve has unleashed since the beginning of this crisis. Keep in mind, these are things backstopping things like corporate credit to municipal bonds, in addition to that Main Street lending program hoping to offer loans to medium and small sized businesses. Now, for what it's worth, the Biden administration, with a statement of its own, the National Economic Council nominee from the Biden campaign, that being Brian Dees, apparently with a statement out just this afternoon saying, quote, "The package should not include unnecessary provisions that would hamper the Treasury Department and the Federal Reserve's ability to fight economic crises," adding later, "Congress's good faith effort to deliver immediate relief should not be delayed by provisions that could put our future financial stability at risk," end quote. So the Biden administration, with the potential Secretary of the Treasury, Janet Yellen, saying that they think that this move would hamper their ability in the future to combat things if economic conditions worsen. But Pat Toomey and the Republicans argue on their side of things that the Federal Reserve facilities aren't needed, and that it's an overstep of the central bank's authority. So a very interesting kind of in the weeds, inside the beltway issue that could be tripping up that second round of stimulus checks and unemployment insurance. Alexis?
All right. And it's a busy day for the Fed, because I know they're going to release the results of an extra set of stress tests today. And those are going to determine whether the top banks can hike their dividends and start buying back stock again. What do you think we can expect?
Absolutely. Well, for those who recall, the Federal Reserve already did a round of stress tests this year. That was back earlier in the summer. But what the Federal Reserve said at the time was that obviously we find ourselves in a very present stress test scenario in real life with this coronavirus situation. So the Federal Reserve had announced that they were going to do a second round of stress tests, and the results of that second round will be coming this afternoon around 4:30. Now, in that test, we will see what the state of the banks, the largest banks in the country, look like under three different types of economic scenarios: a V, a U, or a W-shaped recovery. Now, those types of things, again, will be baked into whether or not these banks will be cleared for their capital plans when it comes to their plans to distribute capital, whether that's in the form of dividends or share buybacks. What we do know is that so far the Federal Reserve has imposed a limitation on the amount of dividends that the banks can pay out, in addition to a full-on restriction on any sort of share buybacks. So depending on the results of what we'll see later this afternoon, it could actually require the Fed or push the Fed to extend that type of restriction through next year if it felt it necessary. Again, we don't know. We'll find that out when we do get those results, but we'll have the full coverage of that right here on Yahoo Finance.
We will, and you'll be all over it. Brian Cheung, thank you.